Hey, Jonathan here from NorfolkFXTrader.com, and in today's video we're going to be talking all about how to use market structure with supply and demand trading. So by the end of this video you will have a much better understanding how to apply market structure with what you also learned in the previous video of how to trade trends within trends. As I said in the intro of this video, we're going to be talking all about the market structure in this second video of this three-part series. And don't forget that we've got the final part coming up at the end of this video, which is all about that confirmation entry. Now, if you haven't seen that first video in this series on how to trade trends within Forex trading, I do suggest going through and watching that first, then coming back to watch this video, as it will tie in much better for you to understand. Now what I'm going to do first, I'm going to go over to the whiteboard and just go through the market structure so you understand the market structure in the markets and how we're going to apply that in supply and demand. Then I will go through to some price charts and we'll demonstrate this technique on some price charts with the combining of trends within trends and market structure. That's why it's important you need to have seen that first video first on how to trade trends within trends in Forex trading. Now, of course, if you are new here today and this is the first time you've come to my channel, I thank you for watching this video, but what I do suggest is perhaps going through and watching those first videos first on how to identify supply and demand zones in Forex and then how to easily draw those areas of supply and demand. That's going to help you to progress much better and understand what I'm sharing in these three-part series videos. So let's go over to the whiteboard and let's first talk about market structure. So market structure. Basically, market structure is going to show you the swing highs and lows in the market. Now you must already know or understand about those higher highs, higher lows in an uptrend, and the lower highs, lower lows in a downtrend. So when we're seeing this happen, this is our trending situation. This is going to be our higher lows and this is our higher highs. Now that creates an area of market structure. So our higher low here in the market, and these are our higher highs, and these create our structure points. So these are important to us as traders. Now they're not exactly where we're looking for a trade to come off. That is more of a support and resistance trader, and in a future video we will go through the differences between supply and demand and support and resistance. But what this is going to create is on the swinging pattern to the upside with the trend, it will create our areas of demand where we are interested in looking to trade from. So what is market structure going to do to help us to identify a trade? Well, let me wipe this off and we're going to go into a swing. So what we're going to look at again is the swing on a higher time frame. So this could be a daily time frame swing in a daily trend. Then we're going to look at the lower time frame of either a 1 hour or a 4 hour time frame. And this will be the swinging pattern, what comes back down like so, and then reverses and goes back up with a new trend on that lower time frame. And again, you would see a trend coming up like this and then coming back down. Now, you learned that on the previous video anyway. But now we're going to talk about the market structure. So the market structure is going to be identified as this swing high on the higher time frame of the higher high, and this is going to be our swing higher low. So we know we're in that uptrend. This is going to be our area of structure, of market structure support, or market structure of a resistance. And that's what most people will know market structure as, with a support and resistance trading style. But what we're actually going to be applying in this video is understanding it with supply and demand. So this is going to create our area of demand here. And we obviously know there is a potential area of supply because there was some supply come in as the market pushed down on that retracement. Now what we are interested in is the market structure which is created on these lower highs coming down and these lower lows coming down on this trend within the trend. Now again, you learned that on that previous video on what a trend within a trend is. Now market structure is the key to understanding when this trend reverses on the lower time frame inside that higher time frame trend. So we're going to mark off this last lower high sequence. So this is our last lower high. Just remove that. So that's our last lower high where the market drops down. Now we'll go through briefly in a moment with some candles so you can see what this will look like with some candles. This is where we see the market drop lower, pulls up and removes this last lower high. It's important with market structure as a reverse on these lower time frames, we see that last lower high removed. Now we'll go through in more detail that section right here on the chart in a moment so you can zoom in and really see what I'm talking about. But it's where this market breaks up, pulls back, and we start to see the trend reversing. That is where you're going to be looking for your entries. So the idea is you're looking for those trends within those trends to reverse with the use of market structure. Once you understand how market structure is applied with the trends within trends, that gives you the next step ready to go forward to that confirmation entry. Now, of course, there is a video all about how to determine trends with the use of supply and demand. Now, if you haven't seen that video, then I do suggest going through and watching that video, and I will leave a link above now so you can watch that video if you wish at the end of this video. So let's just go into this section I said in more detail so you can actually see what we're looking at. So this point where the market is going to be dropping down, creating this last lower high right here of market structure. Now it's important to understand this is your last lower high of market structure. This is created when this low is broken and removed. But what does this look like? Well, this will look like this on a chart. We're going to see a bearish candle. And this is going to be that swing down. We're then going to see a pullback, which is created. And then you'll see the next leg down. Now, of course, with a supply and demand approach, you'll know that this has created an area of supply right there. And this is where our supply is. And this is where we're looking for our trades of supply, remember. So what is it, this section, what are we looking for? Well, what we're looking for with market structure, when we see this pullback, this creates an area of market structure. And we need to see this area broken and closed below. Now, it can either be closed like this with a bearish candle or just a bearish candle with a wick to downside. As long as it's broken this low, then it's a valid break of market structure. And then this is where we'll be able to draw your area of supply, and this is where you'll be looking for a trade with the use of trends. But what we're looking for here, we're looking for a reversal. So what we'll be looking for is this market to rally back up to remove that last lower high, which we know is this lower high here and an area of supply. Now what you've learned in some of those previous videos is that for an area to reverse, we need to see an opposing zone removed. And that's exactly what is happening right here. We're then going to see the market rally up. And this is where we see the market removing that high. And that's where we want to see the market removing that high to show us that reversal on the lower time frame of that trend. Now, of course, that comes back to the breakout trading. And if you haven't seen that breakout trading video, I do suggest going and watching that breakout trading video. It's going to give you some great insight on what a breakout should be and 2 different ways that you can actually trade the breakout. So that is the reversal. That's where I'm looking for that reversal to happen with market structure. So this area of market structure has to be closed to the downside. We then need to see this area of market structure removed to the upside like this. And again, it can be either a solid bullish candle or the wick to the upside of a bullish candle, closed candle. This is how we'll be applying market structure in this technique. And it's all going to come together with that confirmation entry when we apply them all together. So I'm now going to go over to some price charts. We're going to go through those candlesticks with market structure and how you can look to read on a price chart to help you with your supply and demand trading. So now we're going to go over to the charts and going to go on to the Audi US dollar once again, as we went through in that previous video. Now we're going to apply the same techniques again that we learned with the trends within trends. And then we're going to actually go through understanding the market structure. Now I'm not going to go through drawing all on the daily again, but we're going to look at this swing to the downside and then this swing as well. And then we're going to understand the market structure. So what we're going to do is just mark out that swing. So I'm going to mark out this swing up. And we're going to make the pullback and then mark the next swing up and the pullback again. And then one more swing to the upside. Now you already should know how to draw this out. Went through that previous video of trends within trends. So once you've gone this, then we're going to go and look at this area. Let's go to a 4 hour first. First, identify if it's a swinging pattern on the 4 hour or that 1 hour. We do have a swinging pattern on the 4 hour, but probably going to look better on the 1 hour. It's about the same, to be honest. So you could actually draw off a 4 hour hair. Now for market structure, what we're looking for is that last low in the market where it rallies up. This is our last high. This is where the market went up, pulled back, went up again. So this became our last high low in the sequence with the trend on the 4 hour time frame. It's important you understand this and you know that last area of market structure sits. When we see this low, we mark this out, this low is broken to downside, then you know it's been removed and we can mark out this next swing down. Now this perhaps would look better on a 1 hour time frame because we've only just removed that swing from this area here. What that then means is, as you remember we went through on that whiteboard, when we see this pullback here, we need to see the break of that high before we can start looking for that reversal. So it's not a great example. Let me in fact go down to a 1 hour on that same area just to see if it looks any better. So it would be the same on a 1 hour. So let's go to the next section to see if we can, this is going to be probably better to show this on. Let's go to 4 hour again. And this is a nice looking swinging pattern on the 4 hour. So we're going to draw this out this time. And so then you can see how this works. So we have the push up here. Let's change this to a blue. And the market then starts to, now in theory what we need to see is the market from this point removing the last higher low of the swing. This is this swing here. Then we know that this trend has reversed. So this swing is not broken until here. So that's quite a move down where you'll be actually waiting for that low to be broken. Then the market pulls back up. And again, we could go down to 1 hour in a moment as well. Then we pull down. What does that mean here now? It means that this is our last area of structure and this was our last area of structure in the market. We broke this last higher low to the downside right here, and then the market created this new lower high from this high as we went lower. That's what you need to understand with market structure. Then the market then has to break this high of market structure for us to know that it's a reversal. So we need to see it go up, and it does it on this candle right here. Then that is a true reversal using market structure. Now I'm going to go back and do this again on a 1 hour time frame, because on the 1 hour time frame it's going to show you a area on the swings much better. Because on the 1 hour, where this was the last higher low on the 4 hour, you can now draw the last higher low on a 1 hour from here. So you can see the difference and remove that line, and then as the market comes down it has to remove this low, which it does right there. So now we have a better swinging pattern. Now looking at that, it does drop down, but if you look at this high has removed it. So now what you'd have to do is, in fact, you still have to draw your swing like this, marking it out, because this became the new area to go from. And I'm going to have to just zoom out on that area. Then we would draw this swing down. It removes this low, which it does. And then again, you got a swing pullback. And this is where you can now start to see the swinging pattern on this 1 hour. This removes this low. So again, this is the low here. It removes it. But then we go higher here, so you would actually take this to this low. So then this swing breaks this low. And as you can see, when we go from this high, we break this low right here. And again, this then becomes the same area we need to see broken. So either on the 4 or the 1 hour on this occasion, this is how the market structure would have looked. And we would have need to have seen, let me shrink that chart out so you can see that trend now. So this is where the trend is making those lower highs on that area on the 1 hour and the 4 hour. This became our last area of market structure, what needed to be broken to be a valid reversal. Now, it won't always look as choppy as this, and sometimes you'll be able to find a trade using the confirmation entry a lot easier. But this gives you an idea how you will use market structure within these trends to show you that reversal. So now you know how to apply and draw those trends within trends. You know how to understand the market structure with applying those trends when you're drawing them out. The next step is going on to that next video, which is all about that confirmation entry, which now will tie these two together, and we'll go through with the supply and demand technique for taking a trade. So I hope you've enjoyed this content today. As usual, give me that thumbs up if you have enjoyed this content, and popping up right now will be that next video going through to that confirmation entry, which is the final video in this 3-part series.